Good morning, guys. How is everybody doing? It is nice to be back after a bit of a break. There we go. Yeah, good to be back after a bit of a break. Feeling kind of refreshed, actually, and ready to attack the market again. I don't know if I will be trading today. It's probably unlikely, not because I'm not ready, just because I don't think the opportunity is going to exist that I need. So I'm much more likely just to be waiting and seeing if I can get probably some upside to get some downside. So let's have a look through some of these markets here. We can have a look at what might be moving the market. I'm just listening to some news and data. Gold is just on a tear, so that's going to be a tricky one. Now, what we got here? There's a couple of things I wanted to check here. That's up 20 euros. You're just looking right down these gold charts. Hi, Ravinda. How are you doing, buddy? Hi, Shukri. Yeah, I think it is good. You know, I've actually got quite a lot of new perspective and a slightly different way that I want to, try and get into an approach with the market. Actually, um, the maybe a good thing is that the market has moved over last week. I did have a trade that I had left running over my week last week, which was for some downside, but I closed that up right towards the end of the week, and I'm glad I did because I think there's going to be probably just a bit of retracement of some type, just to give us a new opportunity. But yeah, it's going to be tricky. I think economies are opening back up, but the pandemic does seem to be surging somewhat. We've heard about Spain over here, and we're now hearing China as well is going to be struggling as well to contain some of the outbreaks over there. So we do seem to be on the move, but I'm also hearing loads of adverts for various products that protect against coronavirus. So there are going to be companies that are going to be doing pretty well still, I would have thought. And I'm looking at some of those actually, just kind of looking around, seeing where the opportunities lie. And obviously looking at ADA, a bit of Cardano as well. Hi, Sui. That's a really good question, Ravinda. Well done. You're holding gold from last week. So the thing about stops is, do you mind telling me the price that you got in at on gold? I mean, there's no indication that this is turning around. Yeah, ADA is on a tear. I know. I'm so gutted. Keep looking over that. I was so close. I would have doubled my money now. It's gone up 100%, and to get 100% movement in anything is just amazing. But yeah, almost 100%. I think I got in at 8 cents, but just got pipped out, and the rest is history. Right, so the FTSE 100 is just popping down initially this morning on a 5-minute chart, but I suspect we're probably looking for a hold here. Now, it doesn't mean I want to play the upside, but I think that the upside is probably quite likely. Let's just see where that might hold itself up. Looks like it could be an inverted head and shoulders coming in here. It's going to be maybe a bit of a deeper one than would be comfortable, and particularly, you know, because of what's going on with everything. Do we really want to be looking for upside in a market like this? Probably not, even though I suspect that's what we're going to get. I think the best course of action is just to wait for that upside to play out, just so we can move it down. I'm just going to move my screen over here 1 second. 9.4. Must be 2. So I'm going to calibrate my drawing here. Right. So what I suspect is going to happen this morning is a hold. Now I know we've had some fairly negative news out just from, you know, China and Spain, but it may well hold here. Now why does that come out black? Because of that. May well just hold here, just along this this level here, which would give us this is a head down here. This is our left shoulder. This is a potential right shoulder here, and this is our head down here. It probably needs to play out a little bit further, and realistically, you know, let's have a look at a trend line along here and see what that looks like. Yeah, chance it could hold there. I think the reason I'm looking for a hold is that I you know, I wonder whether we're waiting for Fed and everything else. So let's have a look at your situation, Ravinder, here. So you feel it will go up. It will go up. Gold, you're £2 in profit. Bitcoin 1K in profit. Nicely done, mate. Still running. I don't know what to do. Oh, cool, man. Okay, all right. Let's see if we can break this down then. So you got a. Thank you, Lewis. Thank you, buddy. Yeah, had a great break. Really good break. So we're probably looking for some upside in the FTSE, but it's a dangerous trade. So you know, whether we choose to play this is going to be a personal thing for you guys. But let's just have a look at Ravinder's situation here and see what we got. So now there's only 3 time frames I'd consider here. And if you consider 3 time frames, I will have a look at Bitcoin for you as well. I don't know where you got in. Is the one thing. So I'm not sure. Not sure what you're looking at, but really you want to let these trades run as long as possible. Now there doesn't seem to be any hint that this is turning around. Now Wednesday or Thursday may change things, because we've got the Fed speaking, you know, and you know, you want to get an idea of not what the chart is necessarily doing at this particular moment in time. So on a 5 or 15 minute chart, what you want to think is what's going to turn gold around. You know, how are we going to get this this push to the upside finished? Now this is parabolic. You know, it's it's moved and moved and moved over a 5-day period, and this is usually a dangerous place to be because it's got no foundation. So the likelihood that gold comes and tests is high. Well, it could be more stimulus for the US, and if that's the case, then gold's going to push higher. Let's see this on a monthly chart. Okay, so here's our resistance point. Now there's a very, very strong probability. You know, whether it's a possibility is different, but there's a strong probability that gold pushes down from here. Now, the question you have to ask yourself is this: if I take profit here and gold pulls back, will I get myself back in for the next run up? And most people find that difficult. You know, so the best thing to do is hold on for dear life. You know, when this is going and going, it's better to hold on for dear life. Now, we know that there's an issue across the board and across the world, and we haven't even got to the point where We haven't even got to the point where we've got inflation yet. And look what happens with gold. You know, we could be getting really nervous about this, but let's just have a look at what has happened with gold before. Massive run to the upside here. Now, if we were to sort of like take that, you know, in the same way, this is almost suggesting that gold, I can't even get it on my chart, is so high, but it's almost suggesting that gold could go well beyond 2,200. You know, these runs do happen. That from that point to that point, it just didn't come back. Now you haven't even had one day where it comes back yet, so you're going to get that. You know, it's very, very likely you're going to get a day when gold pushes back down again, and you're going to have to sit through that. But the job for you is to express how you feel about the world with your trading. That's really what we're doing, isn't it? You know, whenever we trade, we are basically saying this is what we think is happening out there, and this is how I'm going to express what's happening out there. And if we think that there is problems in the world, and then you must ask yourselves these questions, Ravinder. Forget the trade for right now. Just ask yourselves this on a sort of on a broader view. Now, it doesn't matter if you're wrong. What matters is that you take an opinion, because the thing is that this trade is not going to be in isolation. Of course, you want to make the most money you possibly can out of one trade, but really you want to make the most money you possibly can out of all trades. So try and get your thinking like you can't be human effectively. You've got to try and be like a robot. How would you input the data into a robot if you were telling it how to trade? And I suspect if you're like me, you'd be saying, give me a broader picture. What's the broader picture? Now, that can be a technical picture or it can be a fundamental picture. The technical picture suggests at this point that gold is overbought and we are at an area of resistance. So we are at an area of resistance here. And that suggests that we're likely to get a pullback. But if your broader view fundamentally is this is going higher, then you're going to have to sit through that pullback. Now, the question about the stop is, now I don't know where you got in. You know, if you've got in halfway up this bar on a monthly chart, then I'd be suggesting taking quite a bit of profit here is probably wise. But if you got in a bit before, just to give yourself the chance that any pullbacks will be absorbed, then you're really looking to see. What's this done to my chart? You're really looking to see whether you can stay in on a trend line or on a horizontal level. The horizontal level on this right now, where price action stalled, because you want to look for a range and then look where price action stalls. Because if we think about markets and how they move, and we go down to this point here. Let's go down to this point here. This is the low. The market comes up and hits resistance and comes back. And then when it hits, when it takes off, it comes back. It doesn't quite touch that resistance point, but I bet if I put my line on closing prices, it was there. There you go. It comes back. So that's the high of the previous range, if you like, or the previous point where it rejected and it came back up. So then we get to the next point. Now let's go for the high again. And we can't, because we get into this range here. So now we're up here. It rejects that point. So it's got to get through that point. But the likelihood is we're gonna assume it's going to come and test it if it breaks through. It does that, breaks through, tests it here. Thank you, Alan. It tests it there. Now it hits another consolidation area that it's got to get through, and it does it here. Take off, back down again, tests it there. Now the difficult thing here is that gold has not tested. This is the point. So from this point to this point, gold has had what would be, it looks like a 5% rise. Now a 5% rise is pretty large without a retest. So the likelihood is that it's going to test this area. Now the trick is, to take the profit before it does that. and ask yourself, would I get back in here? So it's gone up here. Now the likelihood is it's got to come back here. I don't know when. It's because I always think about these structural points here like gaps. The market will come back and close a gap. The market will come and test structure, but we don't know when. You know, this could go on for a year, and eventually it tests 1820. That's where traders are, are going to want to continue to get in on 1820. So at these areas up here, especially when we're at these all-time highs, profit taking is highly likely. But that doesn't mean that we don't, number one, get a clear view and a clear picture that it's changing, and number two, that that we don't push a little bit higher first. So what I'd be looking for on this is moving my stops really under here. Now I don't know where you got in, as I say, but I'd want to move my stops under here and see if the chart will tell me. Now this is where I get into my 3 time frames. I'm only going to trust 3 time frames: the weekly, the daily, and the 4 hourly. That's as low as I'll go because the move has been, such a good move. I want to try and stay in. Now on the daily, for us to get a signal today, the signal will have to, this bar is going to have to look like this. It's probably likely, it's still going to likely to be green, but the bar is likely to look like this. Open up, push up, come back and close near the low, nearer the low. Now that would give us a pretty a clear indication that the resistance up at this point up here is going to cause an issue for gold going higher without something else, which could happen on Wednesday. We could get Monday and Tuesday where it just kind of like floats in this area here. Maybe does that again on Tuesday, and then on Wednesday it's possible that we get another breakout. But the first thing that I'd want to see on a daily chart before I was getting too nervous on this is a bar that suggested a bit of weakness. Now, if we got this bar, what we could do, if we got something that did that and came back, so we get something that looks like and that's I'm talking about this bar being this, this is the same thing, right? So today it ends up looking like this. If you got this bar, then the obvious place to put stops is near the low of here, 10 pips or so below the bar, because if on Wednesday something happens with the dollar, then it might start then coming down, testing our low down here, and then we can look for a trade to the upside from there, which is what we're looking for. 1820 for our next entry. Somewhere around 1820 is the obvious entry point right now. That's the clearest point, and we can do a fib on it as well, just to see if that confirms that price. Now, if we don't get that bar, then with stops, what we can do is just be moving them. Now, this is considering the daily time frame. With a stop, what we can do is just consider moving them under that bar first. That one's now gone. Now under that bar, now under that bar, and leaving it there until we get to today's picture. Just in case, and the only reason we move it down there and don't move it under the current bar is that this might happen. And then we come down, and then we end up closing up here. So it might take out today's low, but end up just jettisoning itself back up again. So it's better to leave it under this bar here. Now the other way to play it, obviously, is going to be on the 4 hour and see if there are any of these things that were going on the 4 hour. So where we've seen these ranges going on. These ranges going on and then breakout, which means that when it comes back down here and breaks back up again, our stops are flying there, stops are there, and until it comes back down again, we're not able to put our stop up. But let's see if the 4 hour gives us a picture like that to see if there's any corroboration or any structural things going on. Yes, XAU USD, you got it. Right, now structurally, what we got with the 4 hour is slightly different. There's an area here. Price comes up, it rejects, it goes through, it tests. No problem, mate. No problem. No problem. And you know what I'm trying to do is not say put your stop here. I'm trying to say this is how I would analyze it, and this is where I'd make my consideration. You know, this is how I would consider a place to put my stop. This was the next point it had to get through, if you like, that high there. And interestingly, you know, some of them react off solid closing price horizontal lines. But look at gold, very much likes to just test the wick high rather than the closing high in this area. It tests the wick high up here. So it comes up again, rejects a bit, and then it goes through, tests again, and then it's off. So right now, this is suggesting on the 4 hour that our stops could be here somewhere, around about the 1895 level, probably, on the 4 hour. So let's have a look at 1895 and see what that looks like on some of the other time frames and see what that gives us. So we're probably looking at a stop around there. On the daily, what does that look like? Well, the daily gives us under this bar here. So ultimately, 1895 is, or 1890, let's say, is around about the area that I want my stop, that I'd want my stop on gold. But I'm not going to move it there just yet. I wouldn't want to move it there until the day's closed. But that's the most obvious point at this stage to move our stop. 1875 under this bar is probably where I'd have it now. But I'm looking to put it to 1890, between 1890 and 1895. But I'd want a bit more information off this bar here. There's nothing that is suggesting it's coming back just yet. Don't go down to the hourly charts and all that sort of thing, because it just make you nervous, and you'll start overanalyzing something that doesn't need to be overanalyzed. You know, the 1895, even on the hourly chart, looks pretty good, to be fair, because you know you'd have to get under that to start a new hourly trend to the downside. Or suggest that there's a new hourly trend to the downside. So that's looking pretty good right now, but I wouldn't want to move it just yet. I'd let that unfold a bit, maybe just before you go to bed, have a look at it. But that will allow you to sit through some more downdrift. Now that does seem like a long way off, doesn't it? 1935 to 1895. You're going to be giving something back, but you want to do as little work as possible from here on in, and just trailing. You know, and allowing yourself to give back. Now, as I say, I don't know where you got in. I don't know why you got in. I don't know what time frame you got in. So if you've got in somewhere around about here, profit taking changes the picture completely. If you are in a short-term trade, this bar here would put me right up. You know, that bar that we've had here would change my perspective, because if I've entered on hourly time frames and I've got in either here or maybe somewhere in the run, then I'd be seriously considering taking some profit at this level instead. You know, under this bar, because this bar is showing that there is weakness up here hour over hour. But if we want a longer run, we need to look 4 hour over 4 hour or day over day. So yeah, go through your reasons for getting in, go through the time frames you got in, and then just look for structure. Now, what the other thing we could do here is just have a look at a fib as well. And let's have a look at the fib on the current run. And all I've done with the fib is taking it from the lowest point of breakout to the highest point of breakout. And the fib is suggesting 38. Yeah, it's given us a similar price actually. 18 looks like 1885 is the 38.2% retracement. 1910 is at 23. Oh, you got in loads, have you? 1880. Okay, well the 1880, the 1918. That one I'd be taking a bit off the table. That's the one I'd probably take some profit on. You know, because that sounds like a shorter term trade. The 1880. I like that, mate. I really like that. So you got an 1881. Yeah, you probably want to leave a couple on. You know, with a 1718, I'd be moving stops a lot tighter, because that sounds to me like a shorter term trade. 18. 1918. Sorry, the 1918 is the one I'd be moving my stops up on. The rest of them, I'd manage them all differently. And this is the interesting thing, you've got in at different points, and it means that you might be able to let one of them just, or one or two of them just continue to move while you take some little chunks of profit out on some of these shorter term time frames. Let's have a look at this with some pivots as well. Daily pivots down there, but that's not a big issue. Some consolidation there on the 15. You're going to have to analyze it differently. For each of your positions, I'd be analyzing it differently. I wouldn't be grouping them together. See, that might be suggesting that that we've got some weakness coming. Because the thing is, what you've got to ask yourself about your 1918 is there a better price on offer? Because that one's the most expensive to you. 1918 is the most expensive. So is there a better price on offer? Probably. Will gold drift to the downside? It probably will. It probably will. We got stuff going on Wednesday, and I'll show you what I mean here. This is what I'm always considering is going on. This is what I'm always considering that's going on. Just trying to get into the mind of traders, What's the mind of the investors out there? And if there's something uncertain that's going on, then the likelihood is people wait. They're much more likely to wait, and that could mean a bit of profit taking, and it could mean a bit of holding off buying any more gold. Now, we do have further breaks in the pandemic, so maybe that puts pay to what I'm thinking. But this this Fed statement here, because this is out here, and we have the funds rate as well. That's a big deal. These two are big deals, and yes, they're likely to push gold higher after them. But what happens before? Do we drift a little bit? And does that mean I get a slightly better price on my trades? And the likelihood is you will, or at least get the same price. And that means that you are able to take some profit on that. Now, what's happening on Thursday? Yeah, then on Thursday, it's a big number. This is a really, really important number now, the advanced GDP. So there's two things that would suggest to me that that the market might just go on hold until those numbers get released, and on hold could just mean a bit of drifting. Is it likely to continue to take off? As far as I'm aware, that story about the outbreak in China and China and Spain are known. So as they are known, the market should have reacted this morning, and I think it probably already has with this price action here. So yeah, manage that 1918 differently, in my opinion. Yeah, they may well have, Ravinder, and that's really important, for you to get an idea of what you believe, and trade what you believe. And if you believe the Fed are going to do nothing and maybe even add stimulus, then you don't want to be doing anything but staying in gold. But it's really important to try and form a worldview on when you're trading, and then express your worldview in there. Yeah, well, I think that's part of it. I think that is part of it, undoubtedly. But the thing is, I suppose what we've got to remember as well is that if the Fed are doing what they're doing, does that drive us into safe havens, or is it just a dollar story? Does it just drive us away from the dollar? Because the ultimate non-safe haven, if that's even a term or a word, is the Aussie. Now, what's happened to the Aussie against the dollar over the last few days? And if we bring up an Aussie dollar chart, then we see that even the Aussie is pushing higher. So this is not a safe haven play going on. It's an anti-dollar play. And at this stage, you've got no protection against that if you are long, if you're long gold and you are long, what was your other one? Oh, Bitcoin, isn't it? So you got two products there that are both basically anti-dollar. And as long as the dollar continues to be weak, both of them will push higher. Gold has got its own story, which is probably about the pandemic and the worldwide economy, and I agree with you on that. But the reason that gold is going so crazy is that it's a double story. It's got the pandemic going on, which would have pushed it higher anyway, and it's got this weaker dollar going on. Because if you were to compare gold versus some of these others, like we know it's well up against there you go. So gold, silver, Bitcoin, and Ethereum. I haven't even checked Bitcoin for a while. Oh gosh, yeah, absolutely right. So Bitcoin is now pushing back in the groove as well, isn't it? And Ethereum, yeah, Ethereum looks good. I quite like Ethereum as a cryptocurrency actually. Whew, gosh, Ethereum's well up, isn't it? 219 to 320. How's XRP doing? XRP not so good though, Shukri. 28% run in a week. Amazing. Amazing. Those cryptos. Well, are you in with us tomorrow, Shukri? In the US show? I'd like to get a bit of let's get a bit of an update on these cryptos. I'd like to know what your thoughts are on whether it's moving because of purely a dollar story. Everything rises against the dollar, or have they got their own side issue as well? Brilliant, mate. Okay, fantastic. Well, let's have a chat about some of those cryptos tomorrow because they're on the move, aren't they? They're on the move, and even though I think we've missed the first wave, well, I should say, not we all have. I missed the first wave. Hey, LT, just seen your post, mate. Nice, Alan. Nice, nice, man. Nice, nice. Well, that's really good that we've got Shukri on board with us to help us out with all this crypto stuff. XRP though I think is interesting, so I'm sure you'll enlighten us, Shukri, on why XRP is not performing in the way that Ethereum, Cardano, and Bitcoin are. Just checking Cardano this morning. It's down around about 5% Cardano, so it's not performing too well at this stage, but a move to the downside with Cardano is going to get me hugely interested. I'm waiting for 10 cents, Shukri, on Cardano. I'm hoping that I'm going to get 10 cents, maybe 12. I would be possibly having my arm twisted at. The FTSE. Now, I did get a question earlier on about the FTSE as well. DOT. Okay, DOT might be a new one to me. Yeah, like that, mate. Yeah, 14,000 for 1,400 for Ethereum. So we haven't missed it. I think you're right. Well, yeah, you're probably right, Shukri. I've got to get over the fact that I got stopped out my first position. And also, not get too caught up with missing out on things as well. Not get too caught up in the fact that patience is always going to be the key with all this stuff. I'm kind of happy to miss. I've missed so many good trades, in my time, and it's not really the ones you miss; it's the ones you get that are important. And I will focus on Cardano as long as I can. But there'll be something else. There will be something else. Now, somebody was asking a question about something. Was it? It was Lewis, I think. Oh, ranging for more than a month. What's my take on it? I think the seasonal aspect is a factor. But I've got to be honest. I don't know whether the FTSE is going to come out of this range. You know, we are stuck in the range and we're getting closer to the low, which is why really I'm quite interested in a long with a FTSE to a degree. You know, the global markets are struggling somewhat, and the FTSE hasn't really gone anywhere. In fact, global markets are incredibly bullish. You look at the S&P. S&P just pushed and pushed and pushed higher. The NASI as well. Where's that? NASI, obviously, we know what's been going on with the NASI as well. Just pushing and pushing and pushing higher and higher and higher. The DAX is the one that I'm really interested in. My only issue with the DAX is that when I looked on the weekly, we get this this bar here, which is suggesting some downside. But you know, again, I wonder whether we might see that downside after Wednesday, if there's something that could turn things around. But we're waiting for news and data to drive this really. But I suspect that you know, without that, we could even take this high out again. You know, that's how crazy it's getting. But the FTSE is likely to hold its its structure, which is basically sideways until then, and it just doesn't have the exposure to the growth that the S&P, the Nasdaq, well, certainly not the Nasdaq. The Nasdaq's got crazy exposure to growth. But I was looking at the DAX yesterday, and the banks have done really well in Germany, whereas you know, in this country they haven't. The banking stories, some of the exposure certainly to HSBC, to Hong Kong, has been a big problem. And when you just think about the structural breakdown of the FTSE 100 companies, they're just not conducive to a market which is doing what it's doing. So I suspect the FTSE will continue to underperform. And if the others come down, then this will probably break out to the low side of its range. And then who knows how far down it can go. But I don't see the numbers being that good. You know, we got to hear what the Fed are going to do. Might be more stimulus, could push the stock markets around the world higher. But by the same token, the GDP number is something that people are going to start fearing. GDP in itself isn't that interesting a number because it's a bit late by the time GDP's released. But if GDP is a beat, that could be quite interesting. You know, I think people have been quite down on the markets recently. But if GDP actually comes out to be pretty good, then I think people are going to be fairly excited. But if it's a huge loss, then yes, we're going to see some movement in the market. But we've got to wait really till Wednesday. So I suspect we might be staying in this. Oh, hey there. Is that Jeff? Actions 12, Jeff. Mate, don't worry today. I mean, it's actually, yeah. Let's get Big O in. I didn't realise he was in. If he's there, let's see what he's up to.
Hey, mate, how are you? Can you hear me?
Oh, you can hear me. How did you get in? How did you? Well, you promoted yourself.
Yeah, because I mean, I was struggling with it. I was struggling with my sound system actually, but I mean, I figured it out with Jeff. Don't worry about it. How are you, mate?
Oh, really good, mate. Yeah, really good. How's things going over there?
Well, everything is fine. Everything is hot as hell, but you know, that's
hot as hell. Are you near the beach?
Yes.
You're near the beach. Oh well, that's yes. Not so bad. You know, it's over here. It's as lukewarm as hell, and I'm also near. But the how's things going with trading? Have you managed to kind of catch any of these big moves in gold? Or?
No, mate. And you know what? Last week I was at the show with Jeff. You know, a couple of days, and I kept talking about that big break on silver. And sadly, when it happened, I was in front of my chart, so I missed it. I missed the big breakout to the. I missed a big break to the upside, and I had been hunting that break for, I don't know, a couple of weeks because I mean, at that level had been really hard for buyers to swipe through, right? And I wasn't going to just leave a buy stop above that level, you know. I wanted,
Yeah.
I mean, uh, because of the volatility that would incur, you know, a big breakout or buyer swiping all those sell orders, you know, it could be a massive fake out. So I had to be in front of my charts to manage a possible trade there. But sadly,
Yeah.
I wasn't, and I woke up to a big 8% move or something like that.
Holy, do you know what? I'm just looking at since the start of July, it looks like we're up near 30% on silver, which is just astonishing. In it, we haven't even finished July yet, and it's up 30%.
Yeah, I know, but the thing is that silver, I mean, between the two metals, silver is leading the way right now. It's the driver of the move, and it has such a potential to the downside. And you know what, mate? Today, yesterday when the market opened in Asia, I was looking at silver. You know, I was looking at silver around the 23 level, and it had been struggling with that level too. And I saw that continuation pattern that it printed, but I didn't take it because I thought that the move was a little bit overextended. And again, I missed the last leg up, which is completely fine. But I do believe that we might get a deep pullback in order for us to not a deep pullback, because that would be, I mean, that would be like wishful thinking, but a deep enough pullback, and maybe to the 23 area, for us to be able to jump long again on silver.
Yeah,
And
yeah,
you
yeah.
know what, I had a position on silver. I bought it at 14, and I got ticked out on a retracement around 16 and 90. If it was not for that, I would be holding that trade too.
Wow. I mean, it
It
is.
happens.
It's got a lot further, I suppose, a lot more room than gold has. But why?
Yes,
What
definitely.
have we got an opinion on why silver has done this? What, because I've just looked, actually, gold's up about 10% and silver's up about 30% since the start of July. Why has
Uh-huh.
silver outperformed gold by 20% spread?
Well, I don't know. I couldn't tell you that. I couldn't tell
Okay.
you that, but it's quite interesting to notice that. I've been looking at the gold silver spread chart, you know, and well, at the beginning of the rally, metals around at the beginning of March, right? It was completely driven by gold. That
Yeah.
Yeah, but something happened around the end of March, that the gold silver spread started to dip. The chart started to dip, and it's now lower than it was at the beginning of the year. So something happened. I haven't done the research, so I couldn't tell you
Okay.
exactly what happened. But there is something there that why this metal is why silver is outperforming gold in this way. And
Mm.
don't you think it might be because of the potential to the upside that silver has? I mean, if you look at the weekly chart, um, all-time highs in silver are around the 50 level, right?
Yeah, well, yeah, absolutely, mate. I was just looking at, yeah, monthly. Yes, yeah, he's around pretty much bang on 50, and we're only halfway home. We're not even,
Yeah, we're
actually.
only halfway. That might be something. There might be
Yep.
something there.
Yeah, the potential for growth is much greater in silver than it is for gold. Yeah, appreciate that for sure. I wonder what would happen if gold started to get a pullback, whether silver would come with it, or whether the pullback in gold might just be a bit of profit taking. But because of the move that's still possibly there with silver, the silver might hold its ground a bit. So looking like the better option to me.
Yes, definitely. It is. I mean, it has been the better option for a couple of months. And what you said about gold, I do think the same, Ash, in the sense that we just made all-time highs in gold. You know, there has to be some kind of profit taking going on at these
Yeah,
levels. There has to be, and there has to be. I mean, there has to be some selling pressure also at these levels. You
yeah,
know, short
yeah. I
sellers are always at these levels.
Yeah, absolutely agree with that. I absolutely agree with that. And we were just talking about somebody's in this train. We're just talking about where to move stops, and the issue is that the world is in a mess. So you don't want to get out of
Exactly.
a trade that is already going in your favor.
Yes.
And obviously it's going to be dependent on where you got in. But by the same token, you got to look at this chart and say, this is an area that people are going to be thinking about taking profit. I can't say that they will because we just don't know. But
We don't know exactly. We
the,
are, I mean, we don't have the market depth to know that.
so what are we saying about the Fed? Because I think Wednesday's the key day for these
Yeah.
markets. Wednesday potentially, possibly. I mean, I suppose GDP is just a bit. It's just
I
it's just
haven't.
it's a reflection, isn't it? It's a reflection of whether you were right or you're wrong by the time it gets to
Mhm.
GDP. So
Yeah, exactly.
Thursday's not so interesting. But what are we saying about Fed on Wednesday? Have we got any idea?
I haven't looked at the at the for at the economic calendar, but yes, I see that we have the federal funds rates and the FOMC statement. Well, it was I was there was some talking about more stimulus about 1.7 trillion more stimulus last week. I don't
Yep.
know if you caught that, but
No. Okay. Oh, it was on Telegram, was it?
yes,
Yes.
but the thing is that, no, let me just look for the actual news. So I have it here somewhere. Okay, here it is. Mnuchin says White House focus on putting in 1 trillion more in coronavirus relief and could come back for CARES 5.0. U.S. Treasury Secretary Mnuchin says there might be more stimulus action later. Mnuchin says White House has agreed next coronavirus bill will have 16 billion in new funds for testing. So yeah, I mean, I think there will be more QE coming out of the Fed. But I don't believe that they're going to go full on um, negative rates in the United States either.
Yeah. Yeah, and this is the interesting thing as well. I mean, if you got, did you want to look at any charts? You want to show us any charts? Is there anything else you're
Uh,
looking at?
yeah, sure. Let me grab the screen.
Great. Okay.
Hold
If
on.
I need, let me see if I
Let-
need to give you
Yeah,
powers or anything.
yeah,
There
you
you
have
go.
to give me powers.
I'm really interested in if you've got any thoughts on the euro as well,
Oh yeah. Oh
because the euro seems to have reacted pretty positively. And I think what's interesting about this story is that the European Union got together and we're talking about effectively a cross-country loan, weren't they? Um,
yes, they
and
were.
and it's pushed the euro higher because there's been government stimulus effectively rather than all the governments got together rather than being ECB stimulus, as it were. It's the EU that have reacted rather than the ECB. And if that pushed the euro higher, do we get a situation in the States where the Fed back off a bit, but the government come in and do something, helping the dollar push higher?
I thought about this on this weekend, and I do believe that we're not going to see that in the United States. The government um relieving economically the economy. I don't think that we're going to do everything is going to go through the Fed, through the central bank.
Right.
I mean, there could be some, backdoor pushing between the federal government and the Federal Reserve, but I don't think that is. I mean, we are going to see stimulus coming out directly from the White House.
Right.
That's my belief.
Yeah.
Because Congress will never allow that.
Right. So yeah, so we're probably waiting on that. Well, let's
Yeah.
see what you got here, mate. What are you looking at?
Well, what I'm looking at, a couple of things that I'm looking at. This is a very interesting chart I was working on today. This is the pound versus the U.S. dollar, and what caught my eye here, Ash, is that well, this move is very, very symmetrical. I pointed out here, just as a reminder to myself, this spot right here in future price action. But if I grab, if I grab this move, hold on, which is no, if I grab from this low till this high, this is no. hold on. I don't remember. I think this is it, right? So it's pretty much mimicking this move from these lows and these highs, you know.
What's that? What's
Um,
that underlay there? Oh, okay, okay, that's
yeah,
interesting.
so I'm grabbing the historic price action, you know, and just seeing what could, I mean, if historic price action could suggest a possible move or a possible zone where I could look for some short-term shorts before going higher, you know, and this move is pretty much symmetrical. This from the past move, so what I'm looking at is a retest of the 130 to 129.80 level. So this zone right here that would be also testing the big structure for some selling pressure here.
Hmm.
Uh, yeah, I remember. I mean, because I do believe. Just look at the after this move to the upside, which was for about. Let me see. So this 740 pip move to the upside, then we had a pullback for about 540 pips, and now we have moved just 590 pips, and to this spot it would be 720 pips. So if this is in fact a symmetrical move, we could expect a deep pullback in the pound, right? And this could be a nice spot for some awesome risk to reward, at least to the previous highs, I reckon. So this
So
is what I'm looking at.
you're looking at long in the long the pound dollar.
I mean, I'm pretty bullish the pound, but at this point right here, I will be looking to short this market, the pound versus the USD. More so because, um, well, more so if we get a recovery rally. No, not a recovery rally, but some kind of a rally from the DXY, which is something that I don't think we're going to be getting. Have you seen the US dollar? I mean, it broke some heavy areas of support, some heavy historic levels. But right now, I mean, if we go to, let's put the 750 chart, so we
Trump has
can.
got to be loving this, hasn't he?
He who?
Trump, he's got to be loving the weakness in the dollar.
I don't know. I don't know if he's going to be loving the weakness in the dollar, but I mean, he might be because of V-shaped recoveries in equities. But oh, you mean as not as a weakness in the currency, but as a tool for trade.
No, no, more the fact that if the dollar is weak, then it should promote U.S. companies. You know, as people kind of see a
Yeah,
weak
exactly,
dollar.
exactly,
You
exactly.
know,
That's
people are going to come in
what I
and
mean.
say, well, okay, you know, we'll buy some U.S. companies. They've got decent value. I'll get a good bang for my buck with the dollar so weak. I mean, he's got to
Yep.
be pretty excited about it.
Yeah, exactly. For trade purposes, that's exactly what I meant. Yeah,
Yeah,
I reckon. I reckon. So this level, I mean, historically speaking, the DXY, I mean, it holds these levels pretty nicely, right? Well, not
yeah.
holds pretty nice these levels, but this is what I like about the DXY. You know, that these historic levels come over and over in play, and right now we are bouncing from this low, right? But this is the 750-minute chart, and I use this kind of charts, you know, just to get rid of the noise and look at much larger time frames or
Yeah.
time periods. I'm sorry, but I mean, this move, just technically speaking, I do believe that this move is pretty over extended,
Mm.
but I don't see fundamentally what could
That's the thing. That's the
push
It's a problem,
exactly.
isn't it, mate? It's the problem. You know, if we focus purely on and you know this is something that I think is really important for everybody to learn. If we focus purely on the charts, then we are only really getting 20% of the picture. We've got to focus
Exactly.
on what's moving this stuff, and
Yeah.
then we go to the charts and say, okay, well, if we believe the dollar is going to strengthen, what price action do we need to see to convince us that we've got to trade? But until
Yeah.
then, um, you know,
There's
and it
nothing
does
to
mean that
it.
we've got to stay on top of things and understand, you know, what drives the market. But that's our job. Our job is to figure out what it is that investors are thinking when they are taking positions. Not look at the chart and go, well, there's a setup, so let's go long or let's go short, because the you know the fundamentals are what drive the market. You know, and I always say it's news that creates moves. and you are always trading the news. When everybody's asking about should I trade the news, you are. You know,
You
whether
are.
you like it or not, you are always trading the news and the
Yeah,
data.
we do agree.
So in that way, I'm with you, mate. You know, what's going to drive this dollar higher? And this is why I'm so
Nothing.
interested about Wednesday, because is there
Yeah.
something on Wednesday that helps this out? And would they care? You know, do they want to drive the dollar higher? Because actually, this
No.
helps, doesn't it?
Yeah, exactly. And it helps both ways because if they remain with their super dovish view on monetary policy and fiscal policy, I mean, it's going to drive equities higher. And
Yeah,
that is what they care about, I
yeah,
think.
yeah.
To drive equities higher. That weak dollar is not of big importance to them at the moment, I do believe. But there's nothing, there's no rhetoric that I could see out of the Fed that could bring the dollar out of this super bearish scenario or super bearish market that we are.
Well, I think this stuff has been foreseen and predicted for many years, where people have said ever since the financial crisis, if there is any problems in the structure of the U.S. economy, look out, because the Fed have already used a lot of their tools by keeping interest rates so low for so long.
Yeah,
You know, they've got no room. They've got no room to maneuver here.
they
And
have.
you know, this does drive us towards gold, and it does drive us towards these cryptocurrencies, um, and we might just be seeing what looks like a missed opportunity. This may just be the start. You know, there might be a genuine collapse that is about to happen, and I think the Fed's moves here are going to be watched and poured through with a fine tooth comb, just to see what it is they can do and what it is they will do. But I suspect that they're
Also,
probably running out of quite a lot of bullets.
yeah, and that's why they started testing those programs where they're buying actual ETFs, right? That to me was crazy. You
Mm,
know, I
mm,
mean, they started acquiring. I think it was corporate debt through ETFs.
that's right. Yeah.
Uh, yeah, but they are actually buying into the market.
Yep. Yep.
So this is not, I mean, this is not a normal quantitative round of quantitative easing that we are in the middle of. This is
Yep.
some heavy stuff that could prompt the dollar down even further.
Yep. Yeah.
But
Agreed.
yeah.
And
So
if it doesn't work, and I suppose that's the key, isn't it? It's not such a problem that they're doing it, but if it doesn't work, you know, they mistime the opening of the economy, or the pandemic doesn't go away, or the vaccine doesn't work, or the economy
uh,
just collapses. Because we got to remember that, and this is for you guys really sort of in the room. The reason that they do this is that the Fed's mandate is for price stability and full employment. That's their job, is to
yep,
get that. Now, the only way they can get full employment is by having companies making money. Because if they
yeah,
make money and they make products, they can hire. So if the dollar is weak
exactly,
and people invest in the US stock market, then those the US companies will employ, and that's one of the
exactly.
Fed's mandates. So if that doesn't work, if things don't turn around, and we've got to watch these numbers, if things don't turn around and the US economy doesn't start to grow, then look out below, because uh, there will be a collapse of one of the most successful economies in history.
Yeah,
And that's really what we're looking at. That's where we're staring down the barrel, and gold will push a whole bunch higher than it is now if
yeah.
that was to happen. So yeah, we're looking
Don't
for
even
pullbacks and
mention
all this stuff.
silver.
And we haven't mentioned silver yet, and silver will go beyond its all-time high, if that's
Yes.
to happen. And I guess we've got to keep our eye on silver, because it looks to me like the opportunity in gold is going to get. It hasn't necessarily passed, but it's going to get more and more difficult. Whereas silver looks a
Yes.
bit easier.
Yeah, silver looks a lot easier, and you're correct. I mean, I do. But just before we go again on metals, if you guys just focus on technicals, this is quite the breakout of the bear flag, right? On the DXY. This chart does not work like that, but I mean, just a fun fact that we have broken with a massive bear flag on the DXY.
Yeah.
Uh-huh. Have you guys talked about equities? Because the one that I'm watching is this one, the DAX. I'm pretty keen of a continuation to the upside. What do you think about it?
I'm
More
with
so
you, mate.
because of yeah, more so because of the zone that we're just trading in right now.
Yeah. It's
And
interesting actually because the DAX is the one I touched on very, very briefly. The weekly chart is the only thing that bothers me. You know, the weekly bar
what
is
happens on the weekly?
well,
Oh,
it's just that, you know,
that big bar, that this big
yeah,
bar right
it's a bit
here.
it's a bit of a reversal bar, isn't it, on the
Yeah,
weekly, and that's the only thing that bothers me about the DAX. But I agree. You know, you take out the high of that weekly bar, then the DAX is the one. But I really like the DAX as well. I really like it.
yeah.
It's probably my favorite one. And if you look at the interesting thing I
Banks
think
in
about the
Germany did
DAX.
well, right?
Yes, they did, and with the EU stimulus as well, you would
Uh-huh.
think that this is the one to go for. But the fascinating thing for me about the DAX is that it's been very, very quiet in its work to the upside. So we've all been talking about the Nasdaq
Uh-huh.
and the tech space and how
Yes.
amazingly the Nasdaq has performed. But if you were to look from the start of the year to where we are now in the DAX versus the Nasdaq, they're pretty much on par. I think they're both up about 25% or something like that, but they're pretty much on par. The DAX is the only thing that touches the Nasdaq, but it's been very quiet. People haven't really talked about it. You
You
know,
are absolutely right. Look at
yeah, pretty
that.
close, right? I mean,
Yeah.
the move, you know, so how is it managed to fall under the radar so successfully?
I
I'm
don't
only
know.
just
I have
catching
no
up now, and
idea.
I'm just going, oh man, the DAX, of course, the DAX.
Me too,
Yeah.
man. Me too.
So yeah, I'm with you on the DAX, mate. I really like the DAX as a play to the upside, and I think if we're going to be looking at long equities, we should be focusing on Germany. We should potentially
Yeah.
still continue to focus on the Nasdaq. If we're looking at short equities, I'm struggling to get beyond the FTSE, and you know, hurts me to say that, but I think if we're looking at
But
short equities,
the
it's just a
FTSE has.
dog.
I mean, yeah, but I mean, I hate the zone. This entire
Oh
zone where we're trading right now, it's I hate it. It's
yeah,
untradeable. I
hideous, isn't it?
mean, yeah, but if we manage to break with these lows, it would be a very, very, very good setup for
Yeah, yes,
at
it
least
would.
a short term short, you know. But again, I mean, it has been trading super, you know, how do you call this when it's
Rangy.
yeah, super rangy in the moment and very weaky in the sense that I don't see the risk reward scenario when breaking with these lows on this market.
No.
Yeah, but I don't trade the FTSE myself, so I leave that to you.
Yeah, well, yeah, I think you know the FTSE's a good training ground, but actually it's probably the hardest of all the equity markets to trade right now. So that's why I've been broadening my horizons a bit more recently and looking at the likes of the DAX
The DAX
and the
looks
Nasdaq.
very good, right? I mean, I really like. I mean, I really like everything about this play to the upside on the
Yeah,
DAX.
yeah,
Starting from the technicals, you know, the levels that we're trading at right now. I mean, this dip buy to these highs, which is also this green line, is a very very strong swing level on the daily. I mean, and of course the structure to the upside. I mean, technically speaking, this attracts me a lot
yeah,
more so with this kind of a reversal pattern going on at the bottom,
yeah.
giving a great risk to reward at least to these highs. You know, yeah, everything, and fundamentally speaking, because of what you just said, I mean, everything is very attractive on this market to the upside.
Yeah, I'm with you. I'm completely with you, and I think
Uh-huh.
you know, if I guess if there's a long setup, we'll probably both be on top of this one because you know, I'm watching this one too. What's
Hmm.
are you is today your day, or are you in for the week?
Is Today is my day, and I am also. But this week I am a couple of times. I'm scheduled a couple of times, mate.
Oh, you are?
Both on yeah, both on the show and on the US. So this is my last show, my last London Open show, and I am on the 30th for the US.
Fantastic.
Yeah,
So, oh, amazing. That's Thursday.
that's Thursday, so that's gonna be great.
Fantastic. So we can have a chat on Thursday then and see if we either both got into the DAX or whether we're about to, because I suspect it's going to be after Wednesday, after the Fed's spoken, that I'll be interested in this market.
Yeah, definitely, mate. Definitely.
Brilliant.
So
Okay, mate.
I'll leave the screen to you.
Yeah, fantastic. Well, I think we're pretty much done anyway. I think it's a quiet market today, so I'm not doing a whole bunch. I'm doing a bit of research, getting myself ready for the week. But
hold on. German IFO business climate actual 90.5 versus 86.2, and German IFO business climate for June 94. 90.5 versus 86.2, and the IFO current assessment actual 84.5 versus 81.3. So good news out of Germany coming out. I mean, nothing that's going to trigger our lungs, but I mean, it just popped up on my news terminal and it blinked. So, and because we were talking about the DAX, I saw. I mean, I thought there was a good news to share with everybody.
Yeah, I think you're right, mate. I think I'm just looking at that now as well. So yeah, German IFO business climate is pretty good. I'm just quickly checking the chart on that as well. Yeah, you look at the chart. It's coming up quite nicely, isn't it? It's starting to
get up quite nicely right here.
Yeah, that's popping up. The DAX. So I think the takeaway for us here, guys, is that look out for the DAX, because the DAX looks like the trade.
Yeah.
I might be checking this one out with a bit more detail. But as I say, might be Wednesday. I'm going to get triggered into this, but I'm looking heavily into the DAX right now.
Yeah, me too. Well, I'm pretty happy that we agree on this, because it's always good to have a confirmation from a fellow trader.
Yeah, for sure, and maybe a slightly different way to look at it as well.
Exactly. I mean, I love that about trading in a group.
Yeah. Okay, thanks so much, mate. Well, let's catch up Thursday, and we'll see if we're both in. But thanks again for joining me for this.
Thank you for having me, mate. I'll see you.
I enjoyed it. Yeah, fantastic. Okay, guys, we're gonna wrap it up there. I'll be back same trade time, same trade channel tomorrow, and I will see some of you in the US show later on. Have a great rest of the day, guys. Speak soon.